value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Counsel Incorporated. Her websites, JugglingDynamite.com and VenablePark.com. Welcome back to the show, Danielle.
Hey, Jim.
Crypto-Mania. Everybody is calling me saying, do you have your Bitcoin? It's monster. Do you have this kind of cryptocurrency? Is this the modern version of Tulip Mania?
Well, it's definitely a mania. There's no question about it. It is becoming more mainstream because as price goes up, people are finding it harder and harder to resist the draw. And also, it looks like, they're doing things like bringing out ETFs now, this is a nightmare waiting to happen, right? So they're taking the Bitcoin, which has been as a fringe idea, and now that it's risen, above 50,000, they're putting it into indexes, ETFs, so that the retail public can have easier access. So this is a really bad idea, but it is going mainstream, and that will, of course, attract even more flows into it. This whole model, really, everything that we're seeing right now is about how do we suck more mom and pops into the game, because the pros have been trading against themselves, and they've figured out all these systems that require slow-moving money or dumb money or regular people trying to use markets for their intended purpose. They require them to be the fodder for their schemes, right? They need someone to take advantage of in order to make money. And so that's why you're seeing this model spread across all sorts of sectors and industry. I can't help but think today how we have this fiasco going on of the Senate hearings investigating into what happened with the GameStop crash, the Robinhood crowd, who made news when they were buying call options against shares that so-called, trading institutions had been shorting. And they had this standoff, which was put to the public as the little guys taking some back. But really the little guys just being abused and used. And then they're having these hearings to make it look like something's being done. It's absolutely ludicrous. It's got people like Ken Griffith in there who's, makes Citadel. He makes, billions and billions of dollars off of buying advance notice order flow, from brokers who sell their customers, to him. And, that's the firm that Ben Bernanke went to when he left the Fed head job. He went there as an advisor. They always get the best regulators from inside, the bodies that are supposed to be regulating this stuff always get these sweet gigs when they leave, and the revolving door that goes into these companies. So really what we've got is always a complete charade where they pick a little person to, like they charged someone this week, to blame someone on a person to blame for an individual to blame for what they say is the crash that happened in GameStop shares and that sort of thing. Well, it's like what it reminded me of the flash crash in 2010, where you have all these, technology advantaged machine players trading against each other on leverage, going lightning speed, literally the speed of light. And then when there's a wipeout, because there always is, when you're going that fast with that much leverage, there will always be some kind of a calamity. And when that happens, you get regulators who go looking for, and in the case of the flash crash, you might remember it was, a couple of people trading in the basement in England. and they hold them up as the catalyst or the culprit, and go through this whole public hearing process to make it look like they're doing something, but actually they're doing nothing. They're just allowing the status quo. As I say, it's a completely rigged screwball system now. It is an absolute mockery. It is not anything to do with investing. It is all to do with gaming, addictive behavior, aggression, trying to win, lottery style. It's literally become this absolute joke. And the problem that I have with that, if it was just, crazy people fighting each other and taking on their own risk and living and dying by their own sword, that would be one thing. But it isn't. It's including other large institutions which are considered too big to fail, so that taxpayers are ultimately pledged to support this ridiculous behavior. At the same time, you have, regular institutions that are essential, like pensions, in the midst of all this. It's like they're in the middle of this battle royale, this people throwing dynamite at each other. And, there's legitimate savings at risk in all this, including individuals and people who think they're investing, trying to invest their life savings for, growth in things like ETFs and mutual funds and conventional portfolios and that sort of thing. So they're all at risk in this as well. And, like I say, there's been a bunch of proposals that would actually make a difference. Right now, all of the regulation is the latest big, wave is about making all these participants, proclaim their conflicts of interest. So there's a big initiative right now going on with provincial securities regulators as well as in the U.S. to make all these financial intermediaries define and report their conflicts of interest to their clients, as if this is doing something, right? That if they admit and report conflicts of interest, which in many cases are, thick books of legalese long, so difficult for the average person to appreciate just the extent of the, lechery that they're part of in this system. And, so they're saying that disclosing it is, going to fix it. Actually, what we need is a ban on conflicts of interest, saying you're not allowed to trade against your clients, you're not allowed to cross-sell them, you're not allowed to take advantage of their trust to make yourself rich. That's actually what we need to see. But instead, we're getting all this tinkering at the edges, all this, pretending that we're going after culprits. Nothing will come of this until they put hard lines back on the road, until they break up investment banks into their constituents again, until we have the speculating side divided off from the deposit-taking side. I mean, this has been going on now for 2 decades. It's absolutely ludicrous.
We'll have more with Danielle Park right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Danielle Park. Danielle, with all this craziness going on around you, how do you keep a clear head and a clear target for what you do?
Well, it's what, basically it's what regular people have to try and remember is, that when we were kids and our parents would say, if someone's going to jump off a bridge, does that mean you're going to? I mean, we're literally down to that level of basic common sense. And we have to just remember that there's races going on here that you would never in your right mind ever sign up for. You know, you would never in your right mind take all your life savings to the casino, or even if a casino was open, or buy a bunch of lottery tickets with it. You know, you would never do that. And yet, that's exactly what they've made of financial markets today, in which people are trying to, you know, hold these instruments. That is the state of where we are. So, you know, the only reason, I mean, there's all these psychological pulls and like little, you know, trying to unravel you mentally. These are literally designed, both the media, the sales machine of all these products, the clickbait, the, you know, trading apps, which again make their money by suckering in people to use their apps. And then keeping them addicted so that they're constantly checking their quotes, checking, you know, eyeballs is the quantity here. So that kind of a system is not anything that serious people really should want anything to do with, unless you want to take on that kind of gambling risk. And so you have to sort of be aware that they are designed to take advantage of mental weakness. They are designed to sucker in addictive responses in the brain chemistry. That's literally what it's about. And then it's a long-standing psychological, you know, body of work around the fact that when people think other people are getting rich doing something, or their neighbor is making money doing something, that it has this very reflexive response in even the most sober thought people that might start chasing their tail in this kind of an environment. So you just have to constantly remember what it is that you're trying to do, you know, what risk you're prepared to take, what kind of losses you would be prepared to absorb or could absorb. And you should very carefully control your exposure to this kind of casino environment. Because as we saw in the spring, when you know, everything crashed at once in a matter of weeks, and of course things like cryptocurrency, commodities, you know, corporate debt, equities, preferred shares, everything went crashing down together. That's what I'm talking about. You're in this highly correlated, highly levered environment where everything moves together, other than, you know, GICs, which, yes, they're low yielding, government bonds, which have sold off. Now, in the last couple of months, the yield curve has actually been increasing in a positive tilt. And that's because people have come to some kind of an expectation that we're somehow out of this pandemic, out of the downturn, you know, because there's the vaccination going on. So we've got things like earnings per share growth estimates right now. Long-term earnings per share growth estimates have hit 24% this month. In looking forward, the consensus view is that earnings per share are going to grow 24%. The highest ever that expectation was at 19% in the year 2000. And then it was just as delirious as it is today. So there's a big push right now where people are thinking, great, we're out of the woods, we're going to have a robust jump back in demand, we're going to see huge inflation. And this is all avoiding the reality that we've actually not had a downturn in consumer spending through this recession. We've actually seen people continue to add to their HELOCs on their house, for example, in Canada. People have been borrowing. You know, you can borrow up to 65% of the equity in your house. People have been doing that with, like, huge volume since March as they've been at home and as interest rates have been low. So now we've taken on that much more debt, and there's no pent-up demand on the good side as we come to the end of the pandemic, and we're not even at the end of the pandemic, right? We have this huge surge of new variants, which is going to become, you know, the South African variant, which is less susceptible to vaccines, and the EUK variant are on track to be the most dominant strains in North America by March. So even with the vaccination program, again, in Canada, we're still only about 3% vaccinated. You know, the government's promising to have up to, 40% of us vaccinated they're hoping by the end of June. That's a long way to go before we're through the other side of what we're working on here. So you see this expectation in inflation that's picked up. It has had some opportunity. Government bonds have sold off a bit here, which means that yields have left. So interest rates, for example, so you can buy a government bond today that is yielding, Canada 10-year yields are now 1.15. They were 0.43 back in last August. They're up 167%. And the same with, things like the 5-year yield. And so you can now find some safer paper which will be higher yielding. And I think the expectation for inflation has been so overdone. The asset inflation has been so overdone that once we get into the revelation that, this is a longer process, this is a slower slog, this isn't going to have a ton of, service demand may be pent up, but there's not a lot of multiplier effect in service demand. It doesn't build inventories in the economy. So the economic bang for the buck when people are looking to get their haircut is not the same as when they're looking to, buy a fridge or a new car and that sort of thing. And that's what's been on fire throughout this recession. And they've done it by adding to an already very high debt burden. So I think that the expectation for growth has been way overdone, and that we are likely to see a period where that gets priced back in. Higher yields, by the way, are bad for equities. Because, this whole logic people have been using of there is no alternative when rates were so low, and now all you need is to have, people realize that they can pick up some yield on safer paper, and they don't have to face the catastrophic capital losses that are likely to flow from the madness that's going on. So I think, we're likely to see that hit equity prices still before this cycle is over, and to have some reconnection with the reality of what the economy is likely to have, and the fact that we're likely to have loss of jobs for a long time here. Every indicator that you look at, the retail market is hugely involved here. Speculation of, not just bankrupt companies, Jim. We're talking about unlisted companies. I mean, there's just every way to Sunday to go crazy with the masses here. And the regulation has fallen down completely, as I said, because they've paid to take away all the barriers and protections. The fact that individuals are allowed to trade in options without any training or requirement for know your client, all these regulatory things that we've had in place for decades and decades to protect the investor, the individual, that's all been taken out. And there's absolutely nothing now but, sort of like giving them heroin is essentially it. And we know how that ends. So my point would be, you have to appreciate that environment, not lose your mind with every, crazy person that seems to be doing crazy things right now. Just stick to the path that you want to be on, which is to, be financially responsible, pay down debt, pay off your house if you can, build up your savings, keep your powder dry, don't get sucked into the craziness. And there's going to be a great opportunity because so many people have done those things right now. So many people are holding so much more risk than they understand that when you get a big, massive sell-off period, everything's going to take a hit together, and there's going to be very few people with mental strength and cash. So that's who you really want to be setting yourself up to be right now.
We'll have more with Danielle Park right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Danielle Park. Danielle, is the face of food production going to change over the next decade?
Yeah, well, that's the, report from the Rethinks people who were very prescient when it came to the evolution of the electric cars and the movement towards renewable energy, which is underway. They brought out a report over a year ago now on precision fermentation and how that is the next wave of the future for food, which I've been following for some time. And it's basically just, there's various aspects of it. It is fermenting plant-based alternatives to actual animal flesh. It is also, cultivating flesh from cells without having the actual animal, having to grow the animal and feed the animal. And the report goes into a lot of detail about the impact that's going to have on the farming industry, on agriculture, on, water usage, on the chemicals business in terms of what is, what is the reduction in what is going to be needed if we're not, growing endless crops of land to feed animals, to eat the animals, but we have a much more efficient way to access that energy, those calories. So, their point is that this is already underway. Of course it is. And that it is going to, as all major disruptions do, it always seems to be fringe and people discount it as, such a small portion. But it's kind of like what we've learned with, exponential growth as we saw with spread in the coronavirus. That's how disruption happens as well, with that kind of exponential math. And, so it seems fringe, and then all of a sudden it becomes mainstream enough that it topples the status quo systems. So it is an area of opportunity. It is something to be aware of because there will be enormous investment opportunities in that space, as well as some industries which are going to collapse and be no more. And it's very helpful to know where that risk is as well, so that you're not left long or overexposed to some of that. So it is an important part of trying to understand where we're likely to move over the next decade.
What I'm also wondering too, with the exodus from cities and perhaps office workers will not return to those big towers in our inner cities, could those be turned into vertical farms where you have hydroponics growing on every floor instead of people toiling over a computer?
Well, I think there'll be some of that for sure. I think that there is a massive overbuild of the typical office tower, office space. Certainly some people will migrate back to cities, but I think that this has really given a lot of businesses a view to a more efficient business model. And the changes that are happening in the real estate sector, in the commercial space, these are likely to be again, disruptive shifts that are persistent and stay long after this pandemic. So certainly we'll be looking for ways to repurpose and what would be intelligent use of that space. There's a movement right now in place to geothermal for condo buildings, which is actually, a lot of individual homeowners have been aware of geothermal as a very efficient, emission-free way to heat and cool their homes. But a lot of condo buildings are now moving to that. I think that it'll be part of retrofitting traditional space to figure out more efficient ways to heat them and cool them and power them. And, again, this big storm that hit in the south, in Texas and, all the different states in the south, which are now out of power right now, really again brings to light, the weakness of these centralized grid systems that are not integrated. We have so much more, so many great things that we could be doing to make ourselves more resistant, to these, big weather events that are going to be coming fast and furious, with the changes we've impacted in the climate. Part of the solution is, of course, having these grids that are interconnected so that one that has surplus energy can share it with another area that has a deficit of energy, and then we wouldn't have to suffer through as many of these, big power outages and things. So there's all sorts of technology, plans, know-how, innovation, engineers that are already doing this stuff, and I think that we are increasingly seeing the business case for it, as well as just the lack of suffering case for it, which is good.
Danielle, thank you so much for chatting with us.
Hey, thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. Her website's jugglingdynamite.com, and venablepark.com. If you have any questions for Danielle or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.